when you do insurance, there's 3 plans that you can choose. So you can see here for this Hyundai Accent, you can choose a 65, a 75, or a 90, and these are across all of the vehicles. So the 65% is the split that you take with Turo. So if you make $100, you'll take $65 of that. Same for 75, same for 90. So just be aware that, I'll click on that little there, the host take is the percentage of the trip price you earn from each Turo trip with your car after the cost of your protection plan and the Turo take of any extras offered are deducted. For instance, if you choose a 75 plan, you would pocket 75% of each trip price. The remaining 25% goes to Turo. Now, obviously, the higher the risk, higher the reward. Sometimes. Now, with this 65%, you're only taking 65% of the trip fee, but you have no excess. So if you have an incident, you have no excess to pay. On the 75 plan, you can see you have a 500, and the 90 plan, you have a 1200. Now, this is where I've been stuck in a bit of a pickle sometimes, is that I'm on the 90 plan for all my cars. So I think the plan you choose would depend on what you plan to do with your Turo business long term. If you're planning on renting out 1 or 2 cars, maybe you have your main family car that you use every day, and you have another car that you use a couple of days a week. If that car was to be in an accident off the road, that's going to be a big issue. So if it was me personally, what I would do, I would take 65 and ensure that I've got a replacement vehicle, loss of hosting income. So you got some covering some costs if something does happen, because things are going to happen. Now, on my 90 plan, I take 90% because if the car's off the road, it doesn't affect my ability to create income. It doesn't affect my family's ability to get around. My wife still has her car. Now, my excess, or your deductible, which it says here, is $1,200. So on the example for my Mitsubishi ASX, I bought the car, I made $200 in fees. It was off the road for 2 months. This car makes $1,500 a month, so it's another $3,000 I've lost. I had to pay the $1,200 excess deductible. So now I'm at $4,400. And then the car, I've got to take it back and forth to repair, organize parts, do all that work. So essentially you're out a few $1,000. So that's something you need to be aware of and do your own calculations. If you're on the 75 plan, you're only $500. The 65 plan doesn't cost you anything. So this is what I mean by the higher the risk. Sometimes it's a reward, but if there's an issue early on in the piece, it may not. Now, 65 includes exterior wear and tear included, 75 is not included, and the 90 is obviously not included. So what do we class as exterior wear and tear? Means any dings, dents, cracks, or scratches to the exterior body of your car that is 7.5 centimeters in diameter or less. This includes, but not limited to, rims, wheels, hubcaps, any painted or textured area for the body of your vehicle and moldings. Only the 65 plan includes exterior wear and tear. Only the 65 plan includes. 75 and 90 do not include that. Make sure you're aware of that. So 65 plan, a replacement vehicle. Included in the 65 plan only, reimbursement for replacement vehicles, reimburse hosts for costs incurred by booking alternative transportation while their car is in the shop due to the damage that occurred. Now, so this is what I mean by if you had 2 cars in your household, you use your main car to get to work, the second car is used for work and some other things. If you didn't have that car, it would have a massive impact on your day-to-day. I personally, my recommendation would be to take the 65% because you're going to get included wear and tear, no excess. You're going to get a $50 a day fund for a replacement vehicle, and you're going to get your hosting income included as well. So your out of pocket is going to be a way smaller and less hassle than a 75 or 90. So the 75 plan, again, 75% of the take, $500 excess, no wear and tear, $30 a day replacement vehicle, and then the 90 is no wear and tear, no replacement vehicle. Now, loss of hosting income, which is, I've been asked this quite a few times, what happens if your car is off the road? My ASX was off the road for 2 months. My MG was off the road for almost 4 months. That car makes $1,200 a month. That's a $5,000. My excess was $1,200. So you can see how it adds up pretty swiftly, depending on the damage and depending on how quick you can get into a repairer. Now, loss of hosting income is compensation for the potential earnings that you might be losing due to reimbursable damage to your vehicle. Only the 65 plan covers the loss of hosting income. So the 75 doesn't and the 90 doesn't. Now, so there you go. So you can sort of see what I mean by high risk. You're taking 90% of the income, but if something does happen, you're going to be out of pocket. Potentially. I was out of pocket. Whether you are or not, I don't know. But this is the risk you take. Again, you may have this car on the platform for 5 years and nothing happens. I just got very unlucky on the Mitsubishi ASX I have. It got done the first hire, so I'm out straight up. It's going to take me a month or two to recoup those costs before I again break even. Again, not the end of the world. I don't rely on that car to produce income, so it's all good. But I just want to make you guys aware of what this looks like so you can make an informed decision for the best circumstance for you. Maybe if you've only got 1 or 2 cars, try the 65, see how you feel comfortable. If you get comfortable, you can go to 75, you can go 90. You can change this plan whenever you want. So you can change it whenever you want. No stress. But yeah, just be aware that if you do have a major accident, you're taking the 90, your car may be off the road for months, 3, 4, 5 months. And if that's the case, you're going to lose, you're going to be costing, it's going to cost you $1,200 deductible, and you're going to lose no replacement vehicle and no host income. Just be aware of that. Make your own informed decision. Now, personal insurance. Do you need personal insurance? Yes. You do need personal insurance to cover the vehicle when it's not being used on the Turo platform. So on the Turo platform, the vehicle is covered as long as you follow the steps, check the license, take photos before and after. I take hundreds of photos of each car. Don't be sloppy. Don't take 5 photos. Take as many as you can to make you feel comfortable. You want to be able to sleep at night and know that if something does happen, you're covered. So do you need personal insurance? Yes, you do. I'm currently working on changing insurers. At the moment, because I'm trying to do a better bulk deal because I have 14 cars now, that insurance cost is pretty high. So I'm going to try and bring that down and move over to from a partnership with a insurance company where I can bring across all 14, bring across my houses, potentially my business as well, and package it all up as a entire revenue for them, and they see what type of deal they can bring with that. So I'll unpack that and go through that car by car and let you know who I settled on as my choice of insurer as well, to give you guys an idea of maybe what you could do and the prices you get. Maybe you can actually get better pricing than me and you can help me out and point me in the right direction as well. Again, this Turo journey I'm only learning myself. Now, there's another company you can use called CIL. They do rental fleets, but the discussions I've had with them so far, you have to have 10 plus cars, and I don't think they will do it if you're using a Turo platform, only if you're only renting through your own platform. If you do want to move away from the Turo platform at some stage, that may be something that you look at. If you do, let me know. I can put you in contact with a broker. So there you go. So that's the insurance plan from this end. Again, I've had 2 incidents. Me personally, I choose the 90 plan because I can afford to have that car off the road. Most of my cars I bought outright. The other ones, the loan payments are covered by the revenue of the other cars. So I guess in a worst case scenario, I could have a few cars have major accidents, 3 or 4. That would potentially make a bit of a dent in my earnings and my ability to have no stress. But at the moment that hasn't happened. All 14 are on the road, running well, and I have no current issues. Very happy with Turo and the business all around. Now, if you are interested in putting a car on the Turo platform, there's a link in my description which will give you a little bonus when you do that. And that also helps me out as well. So I really appreciate the support. I hope that covered the insurance aspect when listing your car, and I'll go through some personal insurance in some more videos. So best of luck with your Turo journey.